Joining us for this conversation, we have engineer Didier Olufalobi, the MD Kresta Laurel Limited. Joining me right here in the studio. It's great to have you, sir. Good morning.
Good morning, Laddie. How are you today?
I'm fine. I'm fine. The U.S. just cut rates. Markets are looking good. You know, at this point, everyone's feeling that euphoria, you know, right now, even though there's still some uncertainty, but I'm fine, sir. But, you know, when I have, you know, incredible CEOs and MDs, you know, like yourself on the show, before we get into the conversation, I'd like to ask the question. Looking at the Nigerian economy, you know, right now, what is keeping you up at night? And what is helping you sleep well when you look at the economy so far?
Okay, thank you very much, Laddie. Good morning, viewers. Keeping me up at night remains the fact that there are still a few challenges in terms of the backbone of the entire economic system. And about sustainability, yes, there are a few highs, but we have to put the structures in place to maintain those highs on a continuous high. And those are not there yet. Yeah, it's work in progress. So I'm still worried that we could still have a crash in the price of oil. We could still have a downturn in the quantity that is produced, or, you know. So these are major factors that are still very influential. So until we get to a point that the structure in terms of the rich sector, the oil sector, the diversification of the economy is such that you don't have an over-dependence on a particular product, then you can give some, you know, sigh of relief. So yes, it's looking good, but we are treating it with cautious optimism.
Right, but I'm sure, you know, seeing the stability of the Naira, that helps you sleep for a while now.
Well, yes. After the period of serious uncertainties in the Naira, the value of the Naira, yes, we could say I think it's actually getting better. So yes, it looks good. But like I said, I'm still cautious.
We're still cautious.
Because we've seen the cyclic nature of the rates and the volatile nature of the rates on a consistent basis for quite some time, that we have to be sure that this is we are really there. But like I always say, until we have a reef sector that is fully functional, you know, and so then we can be sure that whatever gains we have are going to be permanent.
Right. All right, let's look at, you know, infrastructure now. You know, definitely that has been cited as a major issue keeping Nigeria from growing the way we would like to grow, you know, economically and otherwise. You know, from your experience, where are you seeing the major gaps, you know, right now?
Okay, thank you. First, when I look at infrastructure, I know most people limit infrastructure to roads, water, rail. I also look at infrastructure in the healthcare system, infrastructure in the education sector. So I try to expand what I call infrastructure more. Having said that, well, the challenge has always been the fact that we don't have adequate funding. You know, the rate at which we need to fund compared with the rate at which we are funding, there's a huge gap. Also, unfortunately, the resources are not available to fund as much as we could. So those are the gaps that are there. However, I think one of the biggest challenges we have with infrastructure funding is our legal system. You know, when you have a legal system that does not guarantee justice on time, and I think the government has to work exceedingly hard on ensuring that people are sure of getting justice at the right time, within a short time. People will bring in funds. Nigeria has a very good return on investment. However, there are quite a lot of negatives, like you said, the issue of volatility of the exchange rate and so on. But if we have a legal system that guarantees you justice, a robust system that guarantees you justice, look at what is happening with infra credit. The moment it was introduced, people began to look at investing. So we need to create a robust system that makes people feel secured when they put in their funds.
So that means, you know, regardless of the, you know, macro issues, you know, you're still trying to sort out your, you know, your currency, you're trying to sort out inflation and, you know, bringing in foreign direct investment and all of that. But as long as you set your justice system right, you will attract funds regardless.
Oh, yes. The critical issue for everybody is that If I go into a place that I'm not familiar with and things go wrong, am I secured? That's the best guarantee you can get in your investment is the justice system that works. That's all. There are other challenges, yes. Everywhere in the world there are challenges. There is no country with a perfect system. But if you get a justice system right, and you know your contract is what the document on which it is printed, and you can go to bed knowing fully well that if anything should go wrong with your investment, you are secured if you are not the cause. Then you can feel, it's a risk. Your risk evaluation is better. That's basically it.
So you don't have to really go out there to go and market your country to try and bring in foreign direct investment. Just sort out
yes.
all of those issues and they'll come running.
Yes. I mean, there's nobody who wants to keep funds sitting down, with very little ROI. So everybody wants to look at places where the return is. And we have a good population, we're a growing economy, we're a developing economy. There's so much to do here. And and the moment you put the structure properly in place, people will manage the rest.
All right, so, talking about, funding infrastructure now, the gap, that we've seen so far, over $100 billion needed, $100 billion needed annually for a decade. That's the projection, to close that infrastructure gap in Nigeria. And we've tried I don't know if we've fully utilized it. That's the PPP model, the public-private partnership. Have we fully utilized it, or should we be looking at another model at this point?
Well, let me say that it's growing. A few people went in earlier. They had a lot of challenges. And as such, there was a sort of caution on the part of potential investors. Local. Let's first speak about local partners, not talk of FDI now. So, but I think with the kind of structures and securities being put in place, more and more people are going to go in. It's growing. We are seeing some investment in some major, based on PPP. Yes, it's growing. But the moment it is clear that it is, the risk is well evaluated, there are security guarantees in place, I'm sure we're going to get better at it.
All right, let's look at the engineering side of things. Now, we know definitely when you look at some African countries, they go out there to get loans, from foreign countries to, build infrastructure. Then at the same time, the country that's giving you that loan is going to help you build that infrastructure. So you're going to pay them to help you build that infrastructure. Definitely that model looks like a huge kind of loss. If you're looking at it economically, are you seeing any improvement when it comes to, local engineers actually getting most of these, big gigs, when it comes to, contracts here in the country?
Yeah, I think there are improvements. Local engineers, there is the Executive Order 5 that is not being fully implemented. But I think that for as long as you go and take the loans from outside, the owners of the funds have their conditions, and you are limited by what you can do, irrespective of whatever your local laws are. So if you need the funds, you get to look at it and weigh the... But what we need to realize is that most of those loans are actually tied down to really big projects, which is actually out of the scope of the Executive Order 5. But having said that, I want to believe that if local companies, first we have little respect for each other. So really, the communication when you are dealing with a local partner is not as encouraging as when they are dealing. So we are on one side, you almost could go cap in hand to beg. With the local partner, it becomes a challenge. But with the companies coming out, I think if there is any idea that we are being shortchanged, it's about us, not about them. Because those projects are happening in some other African countries at better rates. So we need to look at our structure, our projects, management project, contracting structure to be able to ensure that we are not shortchanged. For me, the most important thing is to put the infrastructures in place. And there are different models. One model is going to get a loan. I have always encouraged the build, operate, and transfer model. Because you see, at the end of the day, it is not only infrastructure that we have funding gap in. We have funding gap in education. We have funding gap in health. We have funding gap in food security. We have funding gap in security, all sorts of issues. So we cannot just say because, yes, infrastructure is very important, pump all the funds, take loans, and we don't have time for others, which is what is happening now in most cases, maybe until past 2 years or thereabout, where things are being more evening out more. So my own position is that we need to look at all the models. One of the models is, like I said, is build, operate, and transfer, whether with local investors or with investors coming from outside. You know, we have what we call bankable projects, and we have the non-bankable projects. So for me, for each bankable project, you must look at it critically and see where you can get an investor who will be willing to come, build infrastructure, operate it, maintain it, based on an agreed period, maybe it's 40 years, whatever it is, so that in that period, other things can thrive.
So looking at indigenous firms, like yours and, others, the markets right now, what kind of conversations are you having, to improve local content, when it comes to Nigeria? We're trying to, push on the whole, Buy Nigeria policy. We need to have started this many, many years ago. That way would have gone really far, by now. We don't have to send out, scarce, forex to, get some of these services and products that we need. We're technically importing a lot of things, right now, especially when it comes to this kind of services. So what kind of conversations are you having to, get the government to actually support indigenous firms, at this time, make sure we're getting more Nigerian-made things? We need to have started many years ago, but I guess we need to start at any point.
Well, the first issue, like you said, is the government. Who are they patronizing? So if the government itself does not take the lead by ensuring that whatever, when you go into a government facility, everything there is produced locally, it's going to be difficult to get somebody who has his funds to dictate to him where to put his funds. So first, the government must start, because you see, if you don't patronize local companies, engineering companies, they can't get better. They can't. They need funding, they need resources, they need continuous project flow to be able to retain good staff, to train them properly, and to be able to transfer technology, whatever it is they need to do, so that they can get better. So for as long as, we, as the government is the biggest, what I would call the biggest buyer of goods and services, if they are not patronizing local contractors, local engineering firms, it's going to be difficult for those engineering companies to go. So it's a vicious cycle. So my call is that, and this is the call we are making in the engineering industry, and I'm aware the Nigerian Society of Engineers has been at the front of it, led by the successive presidents. You need to patronize us so that we can get better, we can improve on what we are doing. Of course, there are critical areas, and there's nothing Nigerian engineers have not done, actually, when you look at the history of Nigeria. So you need to patronize us. And the moment the government starts doing that, and people start seeing the results, the private sector is going to jump on board. And that's so to break that vicious cycle, the government must make a conscious decision and respect some of the local content policies they put in place. The policy itself is the first step. The implementation of the policies to the letter is what we are now working on and trying to encourage people to move into.
All right, so, talking about, doing things better, smarter, definitely, I want to believe there's some maybe trends you've been noticing, when it comes to engineering in Nigeria. Are we seeing new technology, being applied, to the way, engineers do work here? What are you seeing so far? Really,
Nigeria is what I would call technology hungry. Most of what we call the new technologies are here. In the industry I play, the elevator industry, there is nothing available anywhere in the world that we have introduced to Nigeria. And Nigeria, in some cases, it's not we introducing it, it's the industry demanding for them. Whatever you talk about, smart equipment, they are here. Smart buildings are now the in thing, green buildings, they are here. We have certified green buildings now in Nigeria. So whatever you say about new technologies coming in, the only place where we are a bit slow is in the renewable energy sector, which we hopped on a bit late. And the thing that is missing there is the role of the government. And now the government is waking up to that responsibility, because the cost of the capex on renewable energy is very high. So, and if you look at where it was grown fast all over the world, the government create a buffer by subsidizing, and then you can also get carbon credits when you use them. So these are things that now people are now jumping on board, hopping on it. So, but in terms of technology, Nigeria is really, really doing well in the deployment of technology.
Right. And, definitely you're a big player, in that sector. And I'm sure there are investors out there, they have cash and they're looking for where to, put that money into. So in your view, where do you think investors are not looking at right now that they should actually be looking?
Yeah, quite a lot of, well, I don't know whether to say they are not looking. In engineering where I play, there's still a very, very low traction in respect of manufacturing of engineering tools, engineering equipment locally. That is always because steel is the backbone of engineering manufacturing, and we've not been able to get our steel right. So maybe when we're able to get our steel production right, we're going to move that, cover that gap. But that's one area investors are not looking at. It's capital intensive, which could be another factor. But the reality is that the moment you're able to sort it out and you take off, there's a lot of demand for production in Nigeria. So today, what you see is a lot of importation of very cheap machines, from Asia. And that is not sustainable. There's a big market for it. Those who are doing locally, the investors are not coming in because by the time you want to do it properly, they look at the total cost outlay in terms of having to import the steel. You lost a lot of margin and so on and so forth. So if you get our steel right, I think that is going to work. Again, we also have to look at the cost of finance for manufacturing. So you realize that...
Hopefully the interest rates are going to go down with the MPC meeting next week. Hopefully we'll start seeing rate cuts, going forward.
If I can put out my neck, I would say they won't change it.
Ooh.
But let's see how it goes.
Yeah, wait and see.
I think the current leaders of finance, they are very cautious about, throwing out too much hope too quickly. And I agree with them. So they are doing it step by step. So I think they might not. They might still keep it, hoping that, because the inflation thing they are fighting, they are not there.
All right, cautious optimism at this point, but thank you so much. I guess that's a good way, a good place to anchor it there. Engineer Dide Olufalobi is the MD, Kresta Laurel Limited. Thank you so much, sir.
Thank you very much
for joining us today.
Thank you very much.